As you know, Congress recently passed and the President signed tax reform, the Tax Cuts and Jobs Act. And as a rewrite of this country's tax policy, there are things in there that implicate or involve our industry. And I know you're getting a lot of questions from your clients about how it impacts them, and you want to answer those questions. So let's talk about how you should handle those questions going forward. First thing to remember, you are not a tax expert. As a result, options 1, 2, and 3 in responding to those questions is go see your accountant, your tax attorney. Push back, try really hard to not give them any information, to send them to those other experts. That's the best, smartest, and safest thing to do. But I know how you're getting a lot of these questions. You hate not being helpful to your clients, and so you want something else. So here's a couple of other options. If pushing them to the lawyer or accountant doesn't work by itself, linked in this article is a CAR document which explains the new law. It gives highlights and a detailed description. If you want, you can print that out and give it to your client. That way you're helping them out, you're giving them information, but it's from another source, it's not from you, and you can't be held responsible if there's a mistake somewhere. Number 2, sometimes that won't even help, and so you want to give them some real basic information. And if you do that, if you give them real basics of the law, and then again, always refer them to their accountant or attorney, you're probably okay. So what are the kind of basics I'm talking about? Well, here are certain things that relate to our business. Number 1, the mortgage deduction on interest for real property has been reduced from a max of $1 million to $750,000 for any loan procured after December 15, 2017. If I had a loan already prior to that date, then the $1 million limit still applies. Number 2, interest on home equity loans is no longer deductible unless the money from that loan is put to improve the real property. Number 3, state and local tax deductions are now limited at $10,000 max. That is not only with regard to your real property taxes, it's all state taxes, income taxes, real property taxes, real personal property taxes, etc. And finally, the standard deduction has been increased for individuals to $12,000 and for joint returns to $24,000, meaning more of your clients will use that instead of itemized deductions, and none of the itemized issues will apply to them. So those are the basics, but if you give them that information, you always say, but I'm not an expert, talk to your accountant, your attorney. You must say that multiple times. If you have any questions about this, please let me know. Thanks a lot.